Hi, I'm back with a new video on trading, and this is a very basic video on technical analysis about how to find the stock where you want to trade. Okay, so here I go. I'll be covering basically these 3 points. What is a good stock? Some simple filters to find a good stock to trade, and actually executing. One tip here is there are several technical indicators which are used by multiple traders to find the right stock. Don't go after several such indicators. Just try to find one and stick to it and learn how to make a profit. There is no one solution for uh, all trades. Master one, and that's the best way to make money in trading. So what is a good stock? So as a trader, your main aim is to make money, and yeah, the simplest definition of a good stock is the one that goes up. Some simple filters to find a good stock to trade. After reading multiple trading books and uh, burning my hands on several trades, I think the simple is where you improve your probability to make a good trade. So these are some of the simple filters that I use to find out where do I want to do trades. And generally, I'm a long trader, so I look for positions in the buy side. Okay, so here it is. What does this DMA mean? DMA means day in moving average. So for me to trade any stock, the first thing I check is if it is above its 200-day moving average, and it should also be above the 150-day moving average and the 50-day moving average. The 50-day moving average should be above 150, which should be above 200-day moving average. Basically, this just shows the trade is biased towards going higher, and we trade in the same direction. Current market price should be greater than at least 25% of its 52-week low. Most of the new traders look for finding value stocks, and they always search for 52-week low stocks. Don't go fall for it. Minimum it should be is above at least 25% of its 52-week low. That ensures that it is not in the downward movement and not at the bottom. You should not bottom fish. CMP within 30% of 52-week high. So let's say the 52-week high of a stock is 100. The stock should be at least above 70 rupees for you to trade. If it's below 70, wait for it to get to above 70 to trade. Here is a graph which shows three lines. The top graph, the green line is the 50-day moving average, the blue line is 150-day moving average, and the red line is 200-day moving average. And if you see carefully, around November time is where the 150-day moving average went beyond, went above the 200-day moving average, and 50-day moving average was already in the upward direction. And if that trade was executed around this point, uh, it continued to move higher, and it was a multi-bagger in those 6 months from there. Now, how do you actually pull the trigger? The hardest part of trading is not actually executing the trade, but waiting for the setup to complete. So, trading is actually 90% time you will be waiting for your stock to come to the right buying level, and you see the right setup to actually trade. Only then you pull the trigger. If you can wait until your setup is complete, you are destined to make money. So these are very basic points about entering a trade and how to filter the stocks. So these six filters you can easily apply on any of the websites which has screeners or filters that will give you a good number of results which are in this, which satisfy this criteria, and you choose among them if it is setting up for a breakout the trade. I hope this video helps. Thank you.